What's up, my fellow traders? Hope you all having an awesome day. A quick one here on net gas, gold, silver, crude oil, starting with natural gas. So what do we have? Right here, a symmetrical triangle has been formed in a downtrend here in natural gas. Now, all we want to see a breakout. We do have a bullish cross right here on capital.com. Now, in this type of pattern, you can go aggressive or less aggressive way of entry. We do not have any sort of entry according to my pullback strategy at this point, but these triangle pattern sometimes play out really nicely if captured correctly. Now, two things that can happen here. Number one, a breakout with a solid candle will confirm the upside movement, or a breakout below with a solid candle will confirm the downside movement. If that happens, if we have broken below, I'm looking at a possible double bottom, as I've been mentioning from a couple of days. If we broke out above with a solid candle, the price might not respect this minor level because it is just a minor level, not a major level. The next level I'm looking at right here, which I'm going to mention after we have a good momentum above 50 EMA. So for now, look at this pattern. We might see a good breakout with a solid candle. Now, if you're someone who is not an aggressive trader, wait for the breakout, then a pullback, then a confirmation like a bullish engulfing pattern. In that case, we'll have a valid pullback entry bullish. With that, we have a breakout, confirmation of a retest, and a bullish candle. So that will be a strongest entry pattern if you're someone who do not want to enter aggressively. So keep an eye on this pattern and let's see how this goes. We have one touch, two touch, three touch, multiple touches all the way from this resistance as well. We might see one more touch and then a push back up. We might see some sort of fake out and then a candle come back and close inside this triangle pattern. So keep an eye. A solid candle is something I want to see for aggressive entry, and break itself will be an entry. Stop loss can be below. Take profit can be 1-to-1 or 1.2-to-1. Make sure you take your profits as well. Don't just look at the numbers. Taking your profits is as important as keeping your stop loss there. Here on NG1, it's not a symmetrical triangle pattern, as we have a flat line right here and a different resistance, as we have flat resistance here on this platform. So simply, as we have no entry condition, just a breakout we need to see above or below for the confirmation. We have a strong bearish pressure at this point, looking at these rejection at right here at the upper level of this pattern. So once we have broken above, expect a push up, a solid push up, and then a pullback and a continuation towards the upside. So we are still not completely bearish, but we have a bearish pressure. If broken below, I'm looking at the double bottom pattern. So keep an eye on these platforms and let's see how it breaks above or below for the confirmation of bullish or bearish market. Here on Owanda, also I'm looking at a 382 candle like I mentioned yesterday. If that happens above 50 or 20 EMA especially, in that case we have a very good chance the price will push up to the next level of resistance, which is right up there, and that was mentioned in my yesterday's videos as well. So keep an eye, mark these zones on your charts. Above and below resistance is right here. Support is in green, 3.324, that goes down to 3.192 is my support zone here on Owanda, and all three platforms I've already mentioned these zones in my yesterday's video. Feel free to mark these zones on your chart as well. As you can see right here, these numbers in blue, one above and one below. Again, that is not a major structure resistance, that is just a level of resistance. I'm just paying attention to see a possible pullbacks and then a continuation towards the major level of resistance, which I'm going to update you guys in my upcoming videos as well. So keep an eye and let's see how this breakout above or below. Next up, we have crude oil. It's still inside the level of right here in the double bottom area. So for now, we are still not very strongly bearish. Now, we do not have any very strong pattern and we do not have any sort of divergence in the RSI. So that will be a very risky entry for crude oil to buy at this point, but I'll be more interested to see if we have broken and closed below these lows. If that happens, I'm going to look for my pullback and a bearish engulfing pattern. That is all I'm looking at, the continuation buy trades. For now, for me, the safest entry will be for buy, break above 50 EMA, and then start to look for the pullback entry bullish. For sell, break below these lows, we're going to start to look at the pullback entry bearish, and going to use this zone for the trend continuation bearish zone here on Owanda. Exactly same on Nemix, on capital.com right here. These numbers in blue is a level of major structure. Once closed below these lows, we have a confirmation that price is gonna push down from here. So at this point, the buy trades will be very risky, but it's totally up to you if you want to go for it. If you have a bullish engulfer, in that case we'll have a double bottom pattern and price will likely to push up from here. Gonna be very risky as we do not have many factors to look for the buy condition like double bottom. With that, I want to see divergence or at least the oversold situation in the RSI. In this scenario, we just have a double bottom inside the support zone, can be a weakest entry if you want to go for it. Otherwise, break below will confirm the trend towards the downside and above towards the upside. Next up, we have gold. Gold just hit the 50% retracement, exactly how we had a pullback from 1.618 retracement of the Fibonacci level, the one we have marked previously. If you remember, once we had a breakout right here, as you can see, the previous level, exactly how we pushed down from 1.618 retracement exactly to this 50% retracement of the new Fibonacci level. So let me show the clip from our last video so that we can connect the dots from there. Gold has just hit 1.618 retracement of a Fibonacci levels. Now, normally when there is no resistance, I use 1.618 retracement for the level of resistance. It is the strongest level of resistance if you use Fibonacci levels. I will mark my Fibonacci levels again from the new candles, which is right here, and the retracement is likely to 50% right here, from where we might see some sort of rejection and then a possible push back up. So for now, expect a possible retracement. 50% can be buy limit order. Go 1 ATR, 2 ATR and manage your trades to 1.618 retracement for the aggressive traders. Perfect. So exactly how we've been predicting gold and moving exactly how we predicted. Now at this point, 50% is your entry triggered, and if you want to manage your trades, go 1 ATR, which is $15 from 50% retracement. That looks something like this, and $15 is a very good move out of gold, and exit your trades here. But if you're someone who want to manage your trades, you can always go 2 ATR, which is $30, 1.2 to 1, or you can go 1.6 to 1 as well. Just move your stop loss below as well. So something like this, 1 to 1 in this case. Otherwise, you can always manage your trades to 1.618 retracement for the very big target. It's going to be risky, but move your stop loss along with and secure your profits as you move towards the upside. So 50% entry has been triggered, and I'm now expecting a price to push up from here, at least first to these recent highs. Once broken above, slowly to 1.618 retracement. So keep an eye. Once we are at this recent highs, expect a double top and a fall, a deep pullback, and then a continuation. It is a move I'm expecting out of gold. So for now, I'm expecting a good push up out of gold, at least to these recent highs. That could be your take profit too, and that is 1.8 to 1 reward to risk ratio. Or you can always keep your stop loss below the EMAs as well and go 1.2 to 1. So it's totally up to you how you want to do your risk management, but from here I'm expecting a price to push higher. 50% has been triggered nicely. Now for the less aggressive traders, just look for the bullish engulfer now, very next candle, or if we have some more pullback, bullish engulfer. In that case, we have a valid pullback entry bullish, and I'm going to go long from here. So keep an eye. It is an aggressive and less aggressive way to enter your trades. Finally, we have silver. Silver is forming a bullish engulfing pattern. With this bearish engulfer, we had a nice push down as well. And now, like I mentioned yesterday, I'll be looking for the possible condition. Now, if that's a valid candle on your own platform, let's see if that's valid on my own platform on IC Markets. That's not valid here. On capital.com, if you look here, that is a valid entry. So if that's valid on your own platform, that can be taken as an entry. I do that sometime as well. I check on multiple platforms. If I find a valid entry, I take it. Now here on Oanda, that could be valid as well. Now, if that closes the bullish engulfer, that will be a bullish swing low entry pattern. In that case, I'll go 1 ATR and manage my trades to this recent top, from where we might see a double top like I mentioned yesterday, and another fall from here. So keep an eye, a possible entry we are getting here on silver, and price will likely to push up from here. So that is it for today's video. Hope you got a value. If yes, give this video a thumbs up. Subscribe if you're new so that we can all trade together and trade efficiently. Hope you trade green. I'll see you guys in the next video. Till then, take care.